Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Going to be going over the data sets and the SPY for June 3rd, 2025. And with that said, let's go ahead and jump straight into it. Sorry, I'm pulling it up on my end. Alright, so we had the PMI, both the monthly data and the revisions, coming out slightly cooler than anticipated. As you can see, the like construction spending right here came out at a negative 4% instead of the forecasted 0.4%. Um, and the previous was negative 0.8%. So cooler. Uh, let's see, manufacturing. So all the PMI data is coming in cooler. The GDP data is coming in stronger for at least the Atlanta Fed GDP, for what that's worth. So that's a good thing. Um, Bullish data. That's pretty much why the market was pulling upward today. Now, I did not track what Powell had to say, but I didn't really notice anything important coming into the news feed or anything. I was very busy today. So yeah, I don't know if Powell said anything important. I don't believe he did. If he did, I'll know tomorrow. Um, Now, Tuesday, tomorrow, we have the factory orders and JOLTS data at 10 a.m. Really not too worried about that. I believe these are both revisions, but I could be wrong. But I'm pretty sure they're revisions, and both of them are expecting to come in cooler. So, cooler data generally means a bullish market. So, we'll see how that works out. But other than that, we don't really have a lot for tomorrow. Uh, we do have CrowdStrike earnings in the after hours, but other than that, it's a pretty bland day, so really not looking forward to the data or anything else like that. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And getting into the technical analysis, as always, let's go ahead and open our daily charts and open our moving averages and Bollinger Bands. So today was a pretty choppy day, but we did close fairly high, and that's a good thing for the 5 mile. So currently the 5 mile is at 590.21. It actually pulled up a lot higher than I expected today. I was expecting it to be closer to around 589. So that's a good thing. That's a bullish thing for the market. Since the market closed at 592.71, it's very likely we're going to see the 5 mile being pretty much around the 591.20-ish range, give or take. It really depends on where the overnight market and pre-market takes us. Um, if it opens fairly close to the same range, then the 5 mile will be at that 591 area. So we haven't fully escaped the 5 mile yet. As we continue moving upward, the 5 mile is going to kind of trail behind us, and until we actually create some major distance between that, then we'll continue having these days where we can further 5 mile test. So with the 5 mile being at 591 roughly, that means that the upper bounds of the 5 mile is going to be at 593, give or take, and the lower bounds is going to be around 589-ish, give or take. So that means currently the overnight price being at 590.82 means that we are still very much so right in that area to be, uh, doing another 5 mile test. Um, Again, if we don't open above that 593 range, then we are pretty much back in the 5 mile range. Um, what I'm kind of looking for here is the market to start pulling away from the 5 mile and having the 5 mile um, trail the market, but starting to create a gap where each day is in a potential 5 month test, where it's going to be more so between the upper Bollinger and where the 5 month is right now. Now, we had a very bullish thing happen with the 5 month today, and that was that it crossed the 10 month, and the 10 month is at 588.38. That's very likely going to be pulling up to the 590 or higher by the end of this week. But the 5 month crossed that area, and with the open, with the 5 month very likely going to be at that 590, 591, 20 range, then that's creating even more of a gap between the 10 month and the 5 month. So that's bullish. That's suggesting that our short-term support is pulling upward, and it's a pulling away from our 2 week average. So overall, that is a bullish sign. Technically, that's kind of like the last bullish sign before the big blast off usually happens. So that's a good thing. Looking forward to that. Now we have the 20 mo at the 581.94. So on open tomorrow, it'll be at the 582 something, probably very low, very likely at the 582.20-ish, give or take. Um, so it is creating quite a gap between the 20 mAh and the 200 mAh right now, so that's another bullish signal, and that means that all of our moving averages, besides the 50 mAh right here, we're kind of ignoring that right now because that's going to take significant time to pull upward. But our short-term moving averages, the 5 mAh, 10 mAh, 20 mAh, is going to be pretty much all lined up to be bullish. So the short-term, mid-term, and long-term are going to be lined up in that way to push upward. And with the upward push, the upper Bollinger is continuing to open up. As you can see, it's kind of hard to see on this chart right here. But you can see today alone, we moved up, basically $1.50 on the upper Bollinger there. So very likely tomorrow, on open, that's very, very likely going to be above the 607 range. And as we continue pulling closer to the upper Bollinger, that will continue moving uh, away from us a little bit until we fully catch up to that range. So I'm really expecting that to be closer to that 50 or that 609 to 610 area. But again, it really depends on when the market is going to have that breakout or not. Um, it could be all the way to the 611 at that point, 612. It really just depends on when the market pushes for this upper Bollinger level. Because again, as each day passes and each day we continue pulling higher and higher, all of our supports are pulling higher as well. So that means that the expected move on an upper Bollinger Range is opening upward, meaning it's going to go higher, potentially pulling us closer and closer to all-time highs again. And with our supports pulling higher, that means that the market has, built a strong level in this range that it can't just really crash through here. It would have to break through the 5 mAh, 10 mAh, 20 mAh, 200 mAh, 50 mAh, and bottom Bollinger to even enter the correction lows again. So that's what I mean by support is very bullish right now. It's pulling upward. And I talked about the ADL in my video last night where we do have this kind of like cup and handle forming on it. Again, that's another bullish sign that's telling us that inflow or money inflow is coming in. When the ADL on the daily time frame is moving upward, that means funds are pouring into this symbol, and this being the S&P, that's a very significant thing. If the ADL is moving downward on the daily time frame, then funds are leaving this. Well, we're at all-time high for the ADL right now, and this even goes back uh, prior, to the all-time highs. So, do we see continuation of this? Very likely. We've built some very bullish structure in here too, and let's just ignore the moving averages for a moment and focus on structure. Let's see if my drawings are all messed up. Nope, okay. So I still have my stuff from last night. but it did erase the bullish cup. We are going to redraw that. Um, One moment, I apologize. So we have the bullish cup right there. Gonna make that extra visible. And then potentially we have this small handle forming right here with an actual handle forming on that uh, cup. And this is what you would call a nested cup because it's a cup within a cup. So it's nested within this cup's handle. Um, Now, many of us were expecting this handle to pull down a lot further. Let me just really lay that out there is that we have this major selling channel top up here, and many of us were expecting this handle to pull downward a lot closer to that 20 mile range, which now has pulled up, very, very significantly. It's already up to the 580 range. So just on the chart alone, that doesn't even reach the bottom of this micro cup right here anymore on the daily time frame. So that's a bullish thing. But do we see a deeper handle from this? I'm losing confidence in that each and every day. So it's very likely we are going to see this cup and handle form a breakout all the way back up to all-time highs. That's just kind of the bullish scenario. That's what the signals and signs are telling me right now. Very likely we see it happen. Now, we don't have a lot of super, super important data this week, but we do have important data. So, is there something that potentially within the next few days can entirely change our structure? Absolutely. And the reason why is because we still have a ton of bear structure um, within this, major selling channel. So as long as we're within this major selling channel, we can still have some sort of, uh, let's just call it an event, create a sell, a move to sell downward. Um, and that would continue forming this liquidity downward into a larger inverse cup and handle. Do I think that's going to happen at this point? I really don't. Um, I thought that that might be the case when we originally had this potential head and shoulders forming on the daily, but the dealers decided to form this little inverse, or not inverse, but you know, this standard cup right here. And it's very hard to look at that and be bearish, even though I know many are starting to discuss the overbought conditions and the RSI, things like that. I'm not too concerned about that just yet because going over fair value gaps, I explained it in a video. I don't remember if it was my video last night or last week, but fair value gaps is just buying the black swan event back up essentially. It's the bump in the road that wasn't supposed to be there, and so all of this buying is just weight returning. Um, so is that overbought conditions or is that just pushing the weight back into the SPY where it was supposed to be? I don't know yet. We'll see. I think that this is really prone to breakout. And let's just go over the 4 hour chart and you can follow on your hourly chart. Again, as always, I use the 4 hour chart to show uh, what you would see on your hourly chart, so just follow along on that. The reason why I use the 4 hour chart is because the hourly chart does not show very well on this app on the computer. So that's why I use the 4 hour chart, but again, just follow along with the hourly. So we had some bearish structure in here, and I'm going to bring up the drawings again. Hopefully it's not too cluttered. So let's go ahead and delete this circle. That was just circling the bearish structure at the top of the cup, which is something we anticipate. For a bullish cup, we expect a bearish structure at the top of the cup to pulse down to form a handle. And then we expect a bullish structure to be at the bottom of the handle to pulse upward. Well, currently we have that all within this area, and it's a very small handle, but we don't judge. Um, sorry. Uh, but yeah, sorry, I'm just trying to look at this in my head for a moment. You know, the bearish thesis here is that this is going to turn into a double top. Today really needed to be a continuation of selling for this to really be a double top for me. Now, it still can. This cup has not fully closed on the handle, so as you can see, we've formed the cup right there, but we have not fully formed the handle. So we can still have some rejection down in here, and that would form a inverse cup right here, all the way down to the 573 range, and then from there we can look for the continuation of this right shoulder and the bear structure to pull downward if we are going to see a move downward for further liquidity, but I'm really not seeing that. I am pretty bullish right now. I do think that structurally everything is telling us we're about to break out. Again, this is however you want to look at it. We have a cup here, we have inverse head and shoulders right here. We have all the signs we're looking for a bullish cup. At the top of that bullish cup, we have all the signs we're looking for, which is a bearish structure to give us the handle. At the bottom of the handle, we have all the signs we need for the move upward, which is that inverse head and shoulders right there. And I'm not drawing it out because it's kind of hard to draw um, right this moment, and I'm fairly blind, so I apologize. I hope you understand. But there's the bear structure right there, there's the bullish structure right there, and we are having the breakout, so it's extremely, extremely likely we do see that gap close all the way to the 598.30. Um, if we see that within the next one or two sessions, I won't be surprised at all. The market to me is telling me that we are going to head up there. Um, again, the bearish thesis right now is kind of, are we going to start entering a consolidation phase where we start seeing the moving averages consolidating and that means pulling together, which we can. If we start tapering the buying in here, then the 5 mile will start pulling downward, the 10 mile will start pulling downward as the 20 mile is pulling upward, and then all those levels will meet, and then we can, do this whole rodeo again of testing a support and you know, seeing if we're going to bounce upward or break downward. But for now, everything's kind of aligned in a way where the market's really telling us that it's ready to break out. It's ready to push back to all-time highs and slightly above that. So, yeah, that's the thesis for now. Um, let's see that 598 get closed, and from there we will follow the structure and everything else. Now, if you are following the 5 mile trade that I suggested, which means that you are in straddled positions right now, so that means you have calls and puts. Your puts would be in the red right now. Um, what am I personally doing with that position? I'm holding both sides until we either get the break to the 595 plus, which is going to suggest we will get that 598 again. And by that point, the calls will be profiting completely over the puts, and we can safely cut puts and walk away with a very nice profit. And see that room upward and hedge from there, and then move from there. But um, seeing how we are seeing some selling in the overnight, we do have the potential to again see the bottom bounds of the 5 mile get tested and potentially rejected. We head downward, and then we could start looking, I really at that 580 range where the 20 mile is sitting right now. Um, I really don't think we're going to head downward yet. Uh, this micro cup on the handle kind of tells me that the market's saying it wants to head upward, but um, again, we do have oversold conditions right now. We do have the ADL pushing really all-time highs right now. Uh, the bullish conditions have been extremely present, so it would make a lot of sense for the market to come down and retest support. It's been over a month now, and generally the 20 mile is tested once a month, on average once a month, once every month and a half, give or take. So um, that's kind of what I'm expecting. For now, I'm really not entering any crazy positions. I'm just sitting straddled and really just waiting again for the breakout from this 5 mile range. I don't want to be cutting my I can't talk, my hedged positions while the 5 mile is right on top of the market. And I've explained why, because uh, if the market wants to do a full 5 mile test, it can go from the upper bounds to the lower bounds very quickly, and it can do that all within the exact same trading session. So it's kind of like what we saw in the trading session yesterday. We had a whole elevator down below the 5 mile and way above it. And that's kind of what we expect out of a 5 mile test. Now, since we have tested the 5 mile, and even though we're still in that range, what I generally am looking for from the 5 mile test is either the 20 mile test or the upper Bollinger. And again, because everything's kind of telling me we are going bullish right now, um, this is heavily suggesting that we are going to be pushing to the upper Bollinger range. So, okay, I'm gonna stop rambling now. I hope everyone has a great night. Have a safe trading day tomorrow, and I will talk to you in the video on Wednesday. Have a good night.